This is a trading strategy that has helped me get funded over a multitude of different trading propriety firms. Once you understand the concept, it's really simple to do and execute. The strategy is called Orb, which stands for Opening Range Breakout. And basically, we're just collecting data from the first few minutes of the opening range. And with that data, it creates a bias and a location of where we can potentially execute trades. So right now we're looking at a naked chart, which it just looks very confusing. Prices going up, prices going down. We don't really know what's happening. So the first thing we want to do is mark out our opening range. The first 30 minutes is the most important time frame of the whole session. We have big institutions, big monies, moving their orders, moving money around. So there's a lot of data that's being collected in those first 30 minutes of the opening range. So I have a script here that shows what that looks like. And if you can see here, this gray area is the first 30 minutes of the market open. And depending on the direction of price, whether it breaks up or down, that is what our bias is going to be for that day. The second part is now getting the data that we need. The data that we're looking for is volume. Volume lets us know where participants are engaging in the market. Whether the volume is high or the volume is low, it'll let us know where people are placing their orders. It'll let us know where participants want to buy and not buy. So I have a script for that, which is the session volume profile. So I'm going to go ahead and plot that on, and we can see right here with that opening range, we have data of the volume. As we take a closer look at the volume profile, we see there's some lines here. We have a blue line, a red line, and another blue line. The red line is the point of control. This is where the most concentrated volume is of this range. And then from that, we have a value area high and a value area low. The value area high and low is just making a section to where the majority of the volume was being traded at. So we can see here at this upper range, there wasn't a lot of volume being traded. And at this bottom range, there wasn't a lot of volume being traded. So whatever here is in the middle is where most of the participants were in this opening range. Now that we have this information, it gives us a good clear location to where we want to execute our trades. So I'm going to dive down here into the 1 minute time frame, and we're going to go back to where the market opened at. So you can see here, this area here is the first 30 minutes, and as soon as 10 o'clock hits, we rally out of the range here. This signifies potential buying bias. So we're going to look for longs, we're going to look for moves to the upside now that we have a break of this range. The thing is, a lot of people try to use this strategy, and as soon as it breaks out of that range, they automatically buy, and then they end up getting faked out and price ends up coming back down and they get stopped out of their position. That's not how we want to play this strategy. Like I said, opening range gives us direction, but volume gives us location. So when we have direction and location, now we know the areas of where we need to execute. So because this broke to the upside, what we want to do for the volume profile is we want to mark out the value area high to the point of control. If this was going to the downside, we would want to mark out the value area low to the point of control. But since it broke out to the upside, we're going to do the volume area high. Now, as you can see, today was not a rally type of day. We were chopping up and down, up and down. Today was a consolidation day, but because we still have our direction and location, we are still able to have opportunity and take trades within this consolidating market condition. So you remember how we collected data for the first 30 minutes of the opening range, and we marked out our value area high to the point of control. This now becomes a level of support for us to take buying opportunities if price were to retrace back to this point. So knowing that this was a consolidation day, we could easily wait for price to retrace back and take quick scalps to the upside. And you can see here we had a lot of touches here. We had one touch here, we had another touch here, we had another touch here, and like 4 or 5 other more touches. And you can see every time it came to this level, we had a rally to the upside every single time it came to this level. So this was 4 or 5 buying opportunities to take a quick scalp to the upside, even though we're consolidating on the day. And this is one of the main core strategies that has helped me become profitable and has helped me get funded across many different proprietary banks and institutions.